Hey guys, and welcome back to another YouTube video. This is a really cool YouTube video because I've been working on this project for a couple of days now, and I really was kind of excited to kind of show you guys this project because I really think that this is gonna be a really cool project that you can actually put on your portfolio or maybe mention it to people, and I'm pretty sure it will look good in any data science or neural net as a data science or neural networking project. So first let's actually understand what this project really is. So this project is really a stock price prediction project. Basically, we are looking at a bunch of indicators and predicting the future stock price of any stock. And the cool thing is this can't just apply to stocks, but you can also apply it with other assets like precious metals or something like that. You can also apply it to things like derivatives, so like futures, options, stuff like that. So yeah, it's a really cool thing what we have created over here, and I'm gonna walk you through it, and I'm gonna explain to you some of the things that I've done because they won't be apparent to you when you are gonna see this video first, because I have used some kind of technical things in this, and it will demand some finance knowledge from you. But don't worry, I will explain to you that stuff so you guys actually understand it, and so even you guys can implement this. So let's jump right into it. So as you can see, there's a little bit of code in this one, and this is not the complete thing. I'm still working on a couple of additions to it, and I just haven't included in it in this notebook. But you can see that even without that, this is a little bit of code. It's not too much, but there is a little bit of code in here. So the first thing I have done is I just loaded in the data that I'm using. Now I was actually planning to use something like the Yahoo Finance API that Python provides. However, it's currently under maintenance, and it wasn't allowing me to pull that data, and so that's why I just had to go ahead and download this data. You can just go ahead and literally use the Yahoo Finance website to download data like this. So just go ahead and use that. As you can see, I've downloaded the Google stock price, and you can definitely just go ahead and download any other stock. It doesn't even have to be on the Nasdaq or like the American stock exchanges. It can be on any other country's stock exchanges, and you will be able to download it. So that's really cool. So over here I'm just getting the head of the data frame, so I can just understand which columns there are, and what data we are working with. As you can see, I've taken data from 1 year back. Now I know it's currently not the 22nd. However, basically this is like not extremely new data. I downloaded this many days ago, like 6 days ago, so that's why it's not up to date. But I mean, I think you get the point. So the next thing that I've done really is just plotted up the open prices and the close prices. So as you can see, I've just added like a little cool thing in the close prices that just gets you the current close price like this and as a line, so you can exactly know what your price is at right now. That's a really cool thing. Now I know that a lot of people just like to graph these two things and just kind of get away and go ahead and make something that kind of predicts the stock price. However, I really don't think that just you can predict stock prices using two indicators. These aren't even indicators, just two graphs. So now I've actually used a couple of indicators to go ahead and this give me an idea of what the stock price is going to look like. So as you can see, I'm applying metrics to predict the general trend of the stock. Really, it should say indicators, but yeah, indicators. Oops, indicators. So the first metric indicator that I'm using is known as the relative strength index of the stock. Basically, what the relative strength index tells us, mainly what it tells us is whether a stock or any security or asset is overbought or oversold. Now, if you aren't as very familiar with finance and stock markets, then you might be a little skeptical as to why this metric is even important. However, if you are familiar with stock markets a little bit, then you might understand that it is extremely important to us to know whether a security has been overbought or oversold. Basically, because if a security has been oversold a lot, then there's a very good chance that price of the security has fallen down quite a bit over the time. And if it has been overbought a lot, then the converse. And the reason why it's important to know, again, if the security is oversold, is because, let's say, if you are analyzing a particular stock, just imagine if a lot of people started buying that stock like crazy. At one point, there is like a saturation to the buying level that anybody can have, even an institution or a group of people. And so at one point, people are going to start selling. And so you don't want to buy at the peak when everyone just finished their buying. What you want to do is you want to buy just when people start buying, so you can enjoy that big profit on a long trade. And then, let's say, when people start selling like crazy, you can just enter into a short trade and then effectively double your profits. And you won't even take a lot of time. So that's really why the relative strength index is super important. So the way we compute the relative strength index is by a couple of equations. Like, there are like 2 to 3 equations. Like, you first compute the moving averages, and then you do some stuff. Basically, you compute the what you really do is you compute the profits and the losses. Then you compute the average gains and average losses over a 14-day period usually. And then you basically divide the average gains by the average losses to get the relative strength of the stock or any security. In this case, I will just be using the term stocks. And then, to compute the relative strength index, you just use this equation and you substitute RS for your relative strength. Now, in this case, it was getting a little messy when I was trying to compute it directly, so I ended up just using this module known as pandas TA, and I just computed the relative strength indexes using that. As you can see over here, all I needed to do was just write that line of code. And then, as you can see, what I've done here is I've just graphed the relative strength indexes of the share. Now let me actually kind of make sense of the graph that I have over here, because people who aren't familiar with this won't understand what is going on. So there are a couple of lines in here. So first, the blue line, it's the most basic thing. It's the share price, the close price of the share, more specifically. Then we have the two red lines. And first let's just look at the green line. It's the current RSI. And then we have these two lines, the upper bound and the lower bound, which is overbought or oversold. Now, as you can see, it's at a 70 and a 30 RSI. So basically, if any stock has an RSI of anything below a 30 in a normal case, now believe me, in some stocks, in some particular stocks, and you will see, even in this stock, that in some cases you don't go with a 70-30 RSI, you maybe will go 60-40, something like that, 60-30, it depends. So, but in most cases, any RSI over 70 indicates an overbuy, any RSI below a 30 indicates an oversell situation. Sorry for that. And anywhere in between, you are kind of okay. But yeah, so that's basically what it is. So yeah, now, all right. So okay, sorry for that. So in this case, if you look at it, over a period of 1 year, you will see that the Google stock price has never hit an RSI of 70. Now that's something to wonder about, because 1 year there's a bunch of data that we are looking at, and Google has barely managed to even hit maybe 65. It hasn't touched 70 ever. So that makes you think, maybe the RSI that Google should actually have the upper bound at isn't a 70, it's a 60. Basically, because if you look at it, as soon as Google was hitting something like 65, Google was seeing drops in the RSI, indicating drops in the share price. As you can see in this case also, once Google crossed the 60, Google had a drop in the RSI and it fell down to basically the same level that we had fallen down again, and then it further came up and fell down again. And so it really just should be 60, because again, it rose up to a 60, it fell down. And so it cannot be a 70 in this case, because you will actually not get the correct information. So in this case, it shouldn't be a 70. But again, since I was running with default parameters, I haven't changed this. But yeah, so you want to analyze the stock in that way. However, you can see why the RSI is such an important parameter. The next parameter that we're looking at is known as the Bollinger bands. So really, it's simple. Now, I know, again, the name sounds a little funny or maybe intimidating, but it's a really simple concept. Bollinger bands are very easy to understand. Especially the people who understand a little bit of statistics, a little bit of math. For them, it's gonna be a super basic thing to understand what Bollinger Bands are. So really, what you do is you graph out the close prices, as you can see, is indicated by the red colored line on this plot, and then you compute the simple moving average or the exponential moving average of your close prices. Now in this case I've gone with the simple moving average, however you can just as well use the exponential moving average. Now I'll show you how to compute that also. Over here, as you can see, I've computed the simple moving average using these lines of code over a period of 5 days. And then what I've done is I've computed the standard deviations over the period of 5 days to get a bunch of standard deviations. Now the way Bollinger Bands work is that you have a simple moving average and then you draw two lines, two plots on the top and the bottom of that simple moving average. So basically a standard deviation of 2. So what you do is you add a multiple of 2 to the standard deviation, effectively basically saying that you want to kind of scale up your standard deviation to 2, and then you just add it to your close average, and in the lower bound you subtract it to your close average to get the lower line. And what this means is that in a general case, the your data won't cross the Bollinger Band. If your data crosses the Bollinger Band, we are looking at a pretty strong upward trend, and that means that that's a cool thing. However, it might just indicate that we are potentially going towards an overbuy situation, something like that. So as you can see in this case, the close price and the simple moving average are very close to the lower Bollinger Band, which can be verified by looking at the RSI, which is at a 40, which is way closer to a 30 than a 60 or 70. So that's why. So the next indicator that we are looking at really is the on balance volume, or the OBV. Now the OBV is an indicator that I kind of understand, but I'm not very comfortable with interpreting. So I will refrain from you taking too much of time to explain you that. Basically, because I really am not the biggest fan of the OBV. However, I do kind of use it in many cases. So yeah, like I do use the OBV a bit, but I'm not the biggest fan of the OBV. So yeah, so basically what the OBV is it is a measure of the buying or the selling power that a stock is experiencing. A positive OBV at a very high level indicates a very high buying power, and a negative OBV at a lower level indicates a bit of a selling power. So in this case, if when you are tracking your OBV, you really just want to look at the recent times. That at least that's how I am doing, because I probably, if I invest in Google for like the short term, I really shouldn't be caring about what happened 1 year prior from now, or in most cases. So in this case, as you can see, the OBV has fallen and it is looking at a very bleak. We are looking at a pretty bleak OBV, and that again it can be verified that there is a lot of selling power, thus lowering the RSI, lowering the close price, and pushing it towards the standard deviation of 2 on the Bollinger Band. And it can also be verified by the close price graph, cause the price is going down. And at least by this time, I think you can understand really what I'm aiming towards is that you don't need a fancy looking neural network to predict the stock price. If you know the correct indications, you can easily predict the stock price by yourself. And now obviously in both the cases you're gonna have errors. There are gonna be places where you expect something and something else happens. However, I mean, that's just how those markets are. You can't just go ahead and be right every single time. There are gonna be times when you're gonna be wrong. However, I'm not completely against the idea of having a neural network. However, I see on YouTube that a lot of people try to just use the close prices as a indication to predict the future price, and I don't exactly agree with that. I would highly recommend that rather than just using that as an investing advice and using simply close prices, you should actually go ahead and use these indicators in combination. So you feed in multiple parameters to your neural network and then get a single parameter output, which is going to be your close prices. Now I know it sounds really crazy, and that those types of neural networks are a little tricky to code, and so I'm probably gonna create a tutorial on that very very soon. So yeah, that's the OBV. I know we kind of went off on a tangent over there, but whatever. So now the next indicator is, which is again something that I kind of like, is known as the MACD, McDonald's. Just kidding. No, it's moving average convergence divergence. I know again it sounds kind of crazy, but it really is a basic thing. Basically, what you do is you take the exponential moving average of a stock over a period of 12 days and a period of 26 days. And all you do is you subtract the EMA, so the exponential moving average of 12 days, by the exponential moving average of 26 days. The next thing that you do is you create a signal line, and really what that is you take the exponential moving average of the MACD that you obtained over a period of 9 days, and what you get is this. Now again, let me kind of interpret this graph for you. So when you see a MACD that is kind of moving up with a bit of a force, and then that indicates and when and after it has kind of intersected with the orange signal line, and that indicates an upward trend. However, if you have a MACD going down with full force after it collides with this, then that indicates a downward trend. Very easy to understand. So let me kind of show you. So as you can see, whenever there was an intersection with this line, there was an upward trend or a downward trend right about to begin, as you can see. And that really is the power of MACD, that if you are able to, once there's this intersection with the line, you can see that we are looking at a downward trend over here. And so this is probably a good time to sell short on the stock, because yeah, I don't think it's looking good for Google right now. I mean, we are operating at almost a 1 year low, around almost a 52-week low, and so it's not looking good for Google right now. But yeah, and basically every single one of the indicators are pointing out towards a grand slam, not so good a home run. Whatever, that wasn't a really good thing joke. Now the final indicator that we are using is something that basically I think everyone knows if you are even remotely familiar with the stock markets. It is resistance and support lines. At least if you do even a little bit of trading via technical indications, I'm pretty sure you know what these are. But however, for the people who aren't familiar, who do sentiment trading and stuff, who simply like to look at sentiments before they trade, for them I'm gonna try to break this down and can explain to you what these resistance and support lines really are. So all right, so the way resistance and support lines work is that you might have seen that if you take out a stock and you graph it out, you will see that stocks over the short period of time, or even on the long periods of time, they'll tend to remain in a little boundary. Like you could just kind of call it like the safe spot of the stock. It will tend to kind of ascend, try to reach and break out of a certain price range or price gap, but it won't be able to do that, and it will fall down again. And then it will, once it falls down, it will kind of stabilize and it will try to fall down more, but it won't be able to fall down, and it will then rise up again. And it carries this on for some time, and it takes a little bit of effort buying or selling to actually break that line and go up. And that's what you call resistance and support lines. So resistance is it can't go higher than that in a normal case. Support is it can't go lower than that in a normal case. There are certain cases where a line goes up and it kind of breaks out the resistance, and then and the resistance acts as a support, then and then the support vanishes that we previously had, and then we create a new resistance. So things like that do happen. So as you can see, this graph is pretty involved because we have a bunch of lines in here, and I don't know how good it looks on video because the lines are kind of thin. But we have the blue line, which is the close price. So if I just zoom in, this is your close price. Then we have the green line and the orange line, which are the first resistance. And as you can see, there are some cases where the blue line has crossed the first resistance. In fact, there are many instances where the blue line has crossed the first resistance. And then we have the red and the purple lines, which are the second resistance and the supports. And there are barely any instances in this entire case where we have managed to have something like that, where we have a cross over the second resistance and support. However, recent Google prices, they have crossed the second support, which isn't a great thing. Like seriously, that's not a good thing. Things are looking bleak for the Google stock price, at least in the recent times. If you are, again, this isn't investing advice. Uh, if you should probably do your own research before you invest. Don't just rely on this video. However, I have this is simply my opinion that Google isn't a good stock to invest in for like have a long position on it. You probably not have short positions on Google right now. And when I say short, I don't mean time period short, I mean short. So you want to short and square off your trades. You want to do something like that with Google right now, because it's really looking pretty bleak for Google right now. It's not looking very good for Google. And yeah, I think it's all because of the recession and like interest rates and stuff. I guess I'm not very familiar with the US stock market, but I just think it's because of that. And I hope that you, if any of my viewer has invested, and I hope you guys get profit. And I hope that you guys kind of found some knowledge through this video. And if you kind of really like what I was teaching you in this video, then I would highly recommend that you check out the website on Investopedia. And this is where I learned how all of these indicators really work. Because I mean, these they have these huge kind of posts on exactly the ins and outs of a single indicator. So as you can see, they give you the limitations, and so as you can see, there are a bunch of cool things. So there are a bunch of really cool things in here, and they basically show you how it works. So if I just go down a little bit, so okay, where is it, that thing? So MACD has a positive value whenever this is about the 26 period, and a negative this above a period of baseline indicates that the EMA is growing in the price. You can see EMA applied to the price chart crossing the blue line. So MACD is often displayed with a histogram. So you can see that they have kind of uh, explain it very nicely. And then this is an important thing: if MACD is below the signal line, the histogram will be below the MACD baseline. Traders will use the MACD histogram to identify when a bullish or bearish momentum is high and possibly overbought/oversold, which can be seen basically because at the points when the MACD crosses the signal line and falls down, which is somewhat of this point, you will see that when you compare it to the RSI, we are looking at a very low RSI, this area. And on the other hand, whenever we are looking at a bit of a higher MACD, as you can see, these were the RSIs that we are looking at, which was over a 60, and that corresponded to a all-time high stock price. So as you can see, these indicators are very very useful. And if you can predict what's gonna happen, if you can really use these indicators nicely, believe me, uh, you will really be able to get some good trades. I'm not gonna go ahead and say like you're gonna get 100% profits, because these are purely technical indicators. So you probably don't wanna just you don't wanna forget every company and just look at these technical indicators and invest. I wouldn't recommend that, but yeah. So I would highly recommend that you kind of add some more improvements to this project, add several other indicators, maybe like ADX or something like that. These are the maybe stochastic RSI. These are the indicators that I kind of like, and these were the ones that I truly kind of understood nicely, so as to actually interpret in any case. And that was the reason why I chose these ones. You can choose any of them that you like. And this project is not yet over. I am currently trying to create certain add-ons. I will try to create them in the future, and but I don't know if I don't know like if I'm gonna show it to you, or if it's just gonna be something that I work on in the background, if I work on it. Because if I may just lose motivation, then maybe I just stop working on this project after all. But yeah, so you know I, even if I work on it or not, I would highly recommend that you guys work on this project by yourself, because this project has a lot of potential. And I mean, this is the project from which you can actually make money if you do it nicely. I mean, as far as we look at this, I mean, the way I look at it is that if you follow what I just told, and if you look at the interpretations that I was using, you can really see that everything was correct. And if we are whenever we're looking like a great growth in the simple moving average, we are looking at a pretty major increase in the stock price. See, so that's the thing. So I really think that these indicators are pretty cool and pretty useful. So yeah, a cool thing that you could have is you can have like a report generator that once all a person needs to do, because right now a person will have to execute all of this code and no one's going to do that. So you can kind of have a report generator where people can just enter certain things, enter the name of the stock that they want. You can just go and search that name of the stock, get the data, generate the stuff, and then generate one final report for them, maybe report.pdf or something like that, a PDF report that contains all these graphs. And then you have like a final prediction and a target price which you have generated via a neural network. That would be a really cool project and definitely something that people would like. So yeah, again, one final thing: not investing in device. However, if you want to invest with this, do it at your own risk. I will not be held responsible if you make any losses. If you do make any profits, do let me know. And in that case, I would like to be responsible. But yeah, just kidding. No, whatever you do, any profit, any loss, it's your achievement or whatever you wanna do. So yeah, yes. But comment down below if you really like this, if you like this project, because this is a cool one, and this was something that I really always wanted to make. This was kind of the dream that I had with Crypto Buddy. If you have been following along with this channel, I had created like a cryptocurrency prediction, price prediction project earlier, a couple like 8 or 9 months ago. And this was kind of the dream. This was what I wanted it to be, and at that point I simply did not have the knowledge or the skills to achieve that. But at this point, the fact that I have been able to create this is super cool, and I seriously hope that you guys like this. And yeah, comment down below if you like videos like this, if you like want to have like more financial technical videos. I absolutely love making